Hello, Namaskara.
Hello, sir.
Good evening,
Hi,
sir.
hi, hi.
Hello, sir.
Hi.
Sorry, a total unexpected change of plan. I had to rush to a doctor appointment, but everything okay. Okay, so in the yesterday's session, we started off, or we looked into chapter 3 as the last component. Let's chapter 1, rather third in my sequence, chapter number 1. We understood what is BPA. We understood what is the concepts where it revolves, and now we move on to what is called as risk and the risk relationship. And now what we are going to do is jump into this topic called as enterprise risk management, also popularly called as ERM, examination popular asked question, right? What is an ERM? In basic simple language, it is a process affected by the entity's board of directors. Very important is this word, entity's board of directors. Why? Because it has to be from the top, right? And it is just not board of directors, it's also the management, other personnel, whoever is related to that hierarchy. For what purpose? For strategy setting. And as the name suggests, it is across the enterprise, designated to identify potential events that can affect the entity and manage the risk within its appetite. What is appetite? How much am I willing to take? A simple example is, let us say you're very hungry one of those days, dinner you will eat so much, right? Based on that, your mom makes a little extra dinner, the next day you will actually eat very less, right? It will eventually end up with, some sort of a leftover food, whatever XYZ, right? So it is an appetite, how much you can take. So ERM is also a process affected by the entity's board of directors and other personnel. For what purpose? Strategy setting across the enterprise. And it is for identifying potential events which could possibly call as potential risk, so that you can manage the risk within risk appetite. Last is to give some sort of an assurance or reasonable assurance that your entity's objective will still be achieved. Are we clear with this? Yeah, that's an ERM. In ERM, I'm not going to speak on any benefits of ERM, but I'll just give you one simple method. Many companies used COVID as an opportunity to scale their business. So that is because they were able to understand the risk much better. So aligning appetite with strategy, growth, enhance risk response, right? Minimize your losses, identify cross-enterprise risk. Because of A risk, can there be a B risk, right? Because of my employees falling sick, can there be a risk of me running the business in regular course, which is called as business continuity risk, right? So various things like that. Now, this components of ERM is important. Examination asks question. The first is internal environment. That means, is there an environment where you can understand risk? A simple example is, if you go into some of these construction sites, right, especially of these large companies like the L&Ts or the Ultratechs or any of those, if you have to keep your foot on that construction site, you need to get a pass clearance, including helmet, safety gear, everything. That means their awareness of risk is gone within their philosophy. Whereas if you go into some other small builder's construction site, right, that fellow would have absolutely no protection, but he'll still be doing it. I hope you're able to get right. Second, objective setting. Am I able to set the objective? Is my vision clear, right? Third, the most important thing, are there mechanisms where I can identify an event? If I don't know what is the risk, there is no way in which I can actually mitigate it. So event identification. Then comes your risk assessment. If I have an event which I'm identifying, then I will assess the risk on that. If the event itself I'm not able to identify, where is the question of risk assessment, right? And once you do the risk assessment, you have a risk response. Risk response we already discussed in detail: reduce, avoid, transfer, accept, right? So these are the 4 typical methods. Right? And this is a simple example of how you do a heat map, we call it. It's not there in your syllabus, but just for you to get an idea. So if it is 25, that means it's very dangerous, or those red are very dangerous. You will always avoid that risk, right? If it is yellow, you will treat that risk, something you will do a treatment, or you will transfer that risk. If it is the lighter green, you may probably go for treating the risk. If it's the lower green or whatever the bottom green which you see, right, you may not take any action, or you may say, okay, that's a risk acceptance for me, right? And then comes control activities, information communication, monitoring. Control activities is for that risk. What is it that you have kept to solve that risk? For that particular risk, what is it that I will do to minimize, right? And once that control activity is done, you need to inform all the stakeholders, and then you have to monitor it. These are 8 components of ERM. Little later, essay 315 also you'll study the components. They're out of these 8, 3 of them are not there, rest all of the 5 are there. So this 8 is like a superset, please bear that in mind, right? Now, next is the concept of controls. Controls is nothing but a policy, procedure, practice, or an organization structure. Important examination question, definition of control. Policy, procedure, practice, or organization structure. Why? They're designed in such a way you get a reasonable assurance that your objectives are achieved. At the same time, undesirable events are PDC. And PDC andre prevented, detected, corrected. Right? So that's a PDC. It could be automated, it could be manual, etc. Those are various types. I think we have already spoken enough about manual and automated. Right? Now, this entire internal control components has got 2 buckets. What you are noticing out here, right? One bucket is an internal control bucket, 2 marks. General control, IT control. Example, security guard is always a general control. Metro gate, where only if you insert the token, the door will open. Have you seen that? That is an IT control. Are you clear with this? You can always say, sir, metro gate, you can jump that gate and also go. Adhikal security control. Yes or no? So you have a general control, you have an IT control, combination is an internal control. This IT control has got further 2 methods, right? And that is called as an IT application control. IT general control is equal to IS control. What is IT application control? Boundary control, input control, process control, output control, database control, communication control. Bicycle, iPod. What is general control? Anything outside that framework. What is there outside that framework? Simplest example is outside of the application. To log into the application, what is the control? User ID, password. To log into the application, I need to have an updated operating system. If I'm using Windows 7, where Microsoft itself has stopped support, then it is a very, very risk-prone event for me. Somebody can back, when Microsoft has stopped support, that means if tomorrow a bug is identified, anybody can attack it. You're getting it? So that's a general control, right? This, if I have to look into, these are a few examples of IT general controls. Already we have discussed in the previous chapters, right? Security policy, access, separation of key functions, backup, recovery, all of those things. So they can ask you which of the following are general controls or which of the following are application controls, MCQ or those things. Now, this is again a practical MCQ question. What are the key indicators of effective IT controls? That means which of the following, if implemented, indicates that there is a proper IT controls. Simple example, ability to execute a plan. You have a plan, your ability to execute that plan, right? And whether you are able to get the required support for it. Otherwise, plan is plan only on the paper. It is like our plan to study. The first day when we attended class, Shetty sir also, no, you have to study from daily basis. The day you decided, I will study daily. After that, book ke mutlila. Right? So it's a plan. Unless the plan is implemented, it's of no use. Right? I can see so many smiling faces. And yes, if camera close madidrunu, I can see you smiling. And yes. So development projects are delivered on time. Your projects are delivered on time. This is a classical example, right? Another example could be, is there lesser issues? Are there newer are there newer bugs and vulnerabilities? All those are examples of effective controls. One of the simple or classical case I'll tell you, right? GST website. Many of them who are into practice, etc., or who have done during articleship, or you just speak with any people 2 years back. The GST website had so many issues. So it's a clear indicator of failure of IT controls, failure of management, failure of governance. Every failure you can attribute it, right? Anyways, now SA 315 again defines what is an internal control, and it also speaks about components of internal control. Right? Again, if you see the same definition, policy, procedure, achieved by management, adherence of policies, safeguarding of assets, prevention, detection of fraud, error, accuracy, and completion of financials. In this, it ensures internal controls. There is something called as components of it. Right? So components of internal control is what I want to speak a mention of. This is what it is. These 5 are the same mutatis mutandis what you saw in the previous thing, but there you had 3 more components except that it was 8, here it is 5. ERM is a broader pillar of which components of internal control is 5 pillars only. Are we clear with this? I'm not going to explain this. There's a self-explanatory. We already gave examples. Control environment, the environment in which it is set up. Risk assessment, doing the assessment of risk. Control activities, keeping a control for the identified risk. Information communication, communicating to across my organization what are the measures. Last is monitoring of controls, doing certain activities periodically. Okay. Then comes the diagrammatic representation of business process. Now this is where each business process they have defined and they've explained, right? You have what is called as a flowchart. In flowchart, I'll just speak about the key symbols, right? And I will not head into all of those. I'll rather head into the most important symbols in a flowchart, right? Start, end, you can see this over here, right? Which is there in this corner. Basically, it is like a circle, right? Instruction flow. Always remember top to bottom, left to right, right? Input output is more or less like a parallelogram, just a rectangle. Solpa tilt madi, right? Process is a rectangle, right? Decision is a rhombus. Page connector is a circle, and print is the same symbol as a rectangle, but solpa kelgade hardogbittide, right? Hardogiro chaddi tara, whatever, right? Anyways, jokes apart. I was just one of the class, coincidentally I was doing flowcharts, and after this, coincidentally my son saw all the symbols. He started telling all the shapes over here. This is square, this is rectangle. He was asking what is the name of the print. I literally didn't know what it is. I said that is out of syllabus and I closed the book. Anyways, really difficult with kids these days. They're much smarter than me, right? Anyways, okay. Then is what is the concept of loop? A loop is where you are doing a repeated activities. Always bear in mind the loop should always come before the input. Only situation where it will come after the input is where the input is more or less constant. 99% of the case, input will never be constant. Otherwise, why are you doing it in loop? Right? Unless, let us say, you have given 10 employee records at one shot. Then it will go calculate one by one. In that case, maybe it will be there. We look into one of those questions, right? And then this business flow charts for drawing the first sum of what is this? First 100 odd numbers. This is a classical flow chart for you to get the concept right? So where we are saying S is equal to 0 and A is equal to 1, where A is the first odd number, S is equal to 0. Then we are telling, hey boss, the sum of the first odd number is nothing but S plus A, because S is anyway 0. Then you are saying to that you add 1. So therefore the sum of the first odd number is what? 1. Next odd number is what? A plus 2. So what is the A we have value we have considered? 1. So that we added 2, what it became? 3. Therefore, how we check whether A is greater than 199? The answer is obviously no, because A is what? 3. Go back over here. This is where I said you will not give it before the input stage. I said that 1% of the problem where you will have to loop it after the input stage is this is the case. S is equal to S plus A. That means now what is your A? A is 3. Your S is already having a value of 1. 1 plus 3 is equal to 4. In simple language, you have calculated the sum of the first 2 odd numbers. And you will keep on repeating until it touches 180. Right? This is the same thing. You have other questions. Yeah, this is another favorite. Identify the 3 quantities, which is the highest, which is the lowest. First, to compare 2 values. The moment you have 2 values, please bear in mind here you use an input, because here you use the word process. Difference is because here you know the first sum of squares of first 20 odd numbers or first odd numbers is always 1 only. It's not going to change. Because here, when you give 3 inputs, so that you can identify H as highest and L as lowest, it can be any number. Therefore, we use the word input. Here, instead of this, you can use a rectangle. Instead of writing H is equal to 0, L is equal to 0, you can also write clear all working locations. CAWL, right? Read Q1, Q2, Q3, or input Q1, Q2, Q3, input. Then you are doing comparison of the first 2 numbers only. So one of them will be highest, one of them will be lowest. From that, now you are now comparing the third number with the highest number. If the third number is higher than the highest number, it is high. If the third number is not higher than the highest number, you will now check if the third number is lower than the lowest number. If the third number is lower than the lowest number, it means low. Adu illu illa, allu illa. That means both the cases it's a no in the process because it is neither higher than the highest, lower than the lowest. That means it is Bijka, the third number. Right? And next, you will also have questions where they give you discounts and they give you some table. So if the order is less than 400, less than 600, less than 800,000, so how many ever decisions are there? How many ever scenarios are there? -1 rhombus you have to draw. So how much I have? 1, 2, 3, 4, 5. 5 minus 1, 4. So 4 rhombus you need to draw. Start input is quantity less than so much, is quantity less than so much, right? Less than so much, and that's it. Stop. Again, you will not draw one more rhombus. It's directly the answer. And one more very important thing, never connect all these boxes together. All the boxes will have a separate path. Because if you connect this box, if the value comes over here, then it will go here, it will go here, it will go here, it will go here. It will get overwritten. Because here, if it follows this path, it will go like this. Otherwise, it may probably go like this. Or for all unit, it may go like this. We do not know. We clear this. All possibilities are there. Next. Quite similar to this. Unless it is a case of an income tax problem, you can expect that as one of the areas where they can test you. This is again quite similar, but my personal favorite is here. The next screen. Yeah, Vishnu Limited. One very important question you need to compulsory solve before the examination. Also, before you prepare or while you're preparing for the exam. So again, here they have 4 scenarios. So that means 3 decision box. And they say this is applicable only if the customer balance is below 500 and does not include item older than 3 months. If any one of the condition is not met, then -1%. Both not met, -2%. Both conditions met, there is an additional condition. So this is where the catch is. So I think until here it's clear. Input the values 1, 2, 3. If all the 3 are no, it becomes in the 4th scenario. Until here, there's no problem. Then comes the interesting thing. You check is the value less than 500. If the answer is yes, again you check whether item history less than 3 years. Then you check is the trade history more than 5 years. If the answer is yes, D+1, otherwise you directly end. Okay, now where you will get confused is there could be yes over here, there could be yes over here, there could be yes over here, therefore you'll end here. If both these things are yes and this is no, nothing you have to do. One is yes and one is no. This is what it is, D-1. But generally what we do after this, we directly write off D-2. We don't check this other condition. This is the confusing question, right? So what you need to do in this case is bear in mind, if this was yes and this was no, this is the additional condition, then we'll have to check whether one yes ito, one no ito, it may still become D-2. Both of them are no, only then it becomes D-2. Are you clear with this? So that's the question which we solved on the other day, which we discussed in detail. Another area which you have to look into it. The rest all I think is easy for you to sort of perform or calculate, right? The other thing which I will probably jump into is data flow diagram. It basically has this symbols, what you notice over here, receiving order, distribution, stock, a very simple flowchart. Difference between a data flow diagram and a flowchart. Of course, DFD they've never asked in exam, but you should just be aware. A DFD is the entire process end to end or entire flow of data, whereas what is that? A flowchart is very, very restricted. Simple example is your ATM, how it works, right? Is a data flow diagram and it's not a flowchart. Why? You have to insert a card. The card has to be validated. It goes to some records, verifies that, comes back. So many processes. You getting money out of an ATM is dependent on so many conditions. First, the card should be valid. Second, you should remember the PIN. Third, the ATM, your ATM should have money. The fourth, your account should have money. Fifth, the bank itself should have money. Right? Today, so many things are happening. Suddenly, bank is only closing off. Right? So a simple example of a process, we use these symbols: process, data flow, external agent, data store, real-time linkage. Right? And there's an example of a data flow diagram: a book, scanner, library, database, all of those. Right? This is an external entity. This is an input. These are processes. This is an external entity, and there last you have a database. So this is here. right? One of the difference between a DFD and flowchart, again, there's only for reference, not there in your syllabus, just that you should be aware of it. Then comes specific business process. Highly recommended you to practice this. Highly recommended you to practice this. You can simplify this process in between here. Credit problem address, credit okay, not okay, all those story. But simple language is customer places an order, check whether he has a credit facility. If the answer is yes, go here. If the answer is no, get the credit problem fixed. The stock, dispatch, send the invoice. Very simple. Right? Here, this is what is called as a Streamline Diagram. It's like a swimming pool we spoke about this. Now, in this, there could be multiple risks. That is what we're going to study in the next few slides. Right? This could also be another example of an order to cash. Remember, 5-6 cycles are there: order to cash, procure to pay, hire to retire, record to report. These are the 4-5 names. So procure to pay, most important, because practically this is where a lot of frauds also happen. There is somebody called as a user department who wants to purchase. It could be material department, it could be stores, it could be you who wants to purchase stationery, you who wants a laptop, anything. They'll reach out to the procurement department and they'll say, hey boss, we want all of this. Right? And sometimes the vendor details are also given, sometimes it may not be given, it depends. Now with that information, you go and search for various types of vendors. Once you have done, you identify the PO or you identify the vendor, you receive the PO. Right? Please bear in mind who issues the PO. If I am ordering, I have to issue the PO. Simple language. Every month you prepare a monthly grocery requirement. Right? Whether you do through Dunzo, whether you do through Amazon, whether you get a home delivery or you only go deliver, whatever, all that story. At the end of the day, you make one list. That list is nothing but a purchase order. Right? Speak to the vendor, get that PO, match the quantities. Then what happens? Receive the quantity if it is a store or if it's user department. If all these things are matching, they will issue the most important document called GRN. The moment GRN is issued, it goes for a 3-way matching by the accounts payable department. As the entry, they make the payment. Now, risk and specific processes. Here, the simplest way is remember 5 to 10 risks. 5 risks or probably even 8 risks is more than sufficient, but they should be at least 5 common, 3 unique. Right? And by the time you read it, you will realize that. And this risk can be at a configuration level, master level, or a transaction. Configuration is one-time setup. Master is the name, history, GST number, details, etc. Reasonably permanent. Transaction is every transaction. Right? Now, where an error could happen, when I'm setting up the entire configuration, something could go wrong. Simple example, the password. Right? I put password complexity as 3 characters. What is the meaning of 3 characters? That means I can have password as 1 to 3. Isn't it easy to guess? Very, very easy. Right? Then I can have master configuration. Then I have at a transaction level. I can have a transaction issue or I can have a configuration issue. Right? Sorry. So configuration, I said the way it is set up. Masters is basically reasonably permanent, employee master, material master, whatever masters we are referring to, and then is transaction. Transaction is nothing but actual transaction. There are various menu options. You are actually choosing which transaction where it is applicable, right? So that is where it is. So from a process perspective, procure to pay, there could be multiple risks. Whatever you see in procure to pay is from a payment related. Order to cash will be the same thing, but here they use the word payment. There they use the word customer. They use the word customer, right? So here it is creditor or vendor. There they use the word customer or client. So unauthorized changes to supplier master. There it will be unauthorized changes to customer master. If it is HR, unauthorized changes to employee master. Right? All valid changes are not input. Changes made to are not correct. Supply masters, whatever. And for each of them, you only have a control objective, not a control. What is an objective? Remove the word risk. That's your objective. Little strange, a little contrary. Only this chapter has the word control objective. Rest all of the chapters have the word control. That means the actual control is what they have mentioned. Again, transaction, unauthorized purchase requisition, purchase order not entered correctly, purchase order are not input. So all of those are your typical transaction. Then is your invoice are not recorded, credit note, cash systems. And then you'll always have one last one entry. System access to process has not been restricted. This is the most common issue or like what you will find here. System access to transactions has not been restricted. right? Same way you look into order to cash is the same thing. Last one, system access to customer master has not been restricted. Reverse in case of transaction, system access to customer or sales transactions is not restricted. Are we clear with this? Quickly moving on to inventory. Again, everything relating to inventory, invalid changes, invalid alterations, etc. So don't think this is running into about 5 or 10 pages in your material. Think that it is one item which is repeated in 5 different contexts. Right? In each scenario, you'll have to use it at different perspective. That's all. Moving on to the last section, regulatory and compliance requirements. Now, what is the regulatory and compliance requirements? This is nothing but the legal framework. Section 134 defines what is called as the requirements of board of directors and financial statements, right? It's a financial statements are basically a director responsibility statement has been laid down. And there is a very important statement called IFC, internal financial controls. Means what? That means any process which is routed, or any accounting voucher, any transaction which is routed through my company has a standardized internal financial process or internal financial control, only after which the transaction gets appropriately recorded, right? So policy, procedures, adherence to company policy, safeguarding of assets, prevention of detection of fraud, etc. Right? Then you have section 143. 143 of the Companies Act. It gives the powers and duties for the auditor. An auditor has to clearly mention what did he audit on the internal financial controls over financial reporting. So we spoke of two things. Internal financial controls is a larger pillar, out of which here auditor has to report only on internal financial controls over financial reporting. That means only to the extent of financial reporting, auditor has to focus. Management no doubt has a responsibility to implement, but auditor has a responsibility to return. Right? And then there's also corporate governance requirements, especially if you are a listed company. Listed company means what, sir? Your shares are traded on a stock exchange. That means you have a number of responsibilities which you have to demonstrate. Right? There's also re-mention of ERM, enterprise risk management. Risk management will have two buckets: assessment, mitigation. Assessment is identify, analyze, prioritize. Mitigate is reduce and monitor. Right? So these are a few things which we already spoke of. Then you have IT Act, Information Technology Act, gives you the legal framework and infrastructure for e-commerce. Right? And there is always an advantage of cyber laws. It gives you, an attempt to change the prediction. Outdated laws are being to move away. It gives you a legal framework and things like that. Right? And it also recognizes digital signature. Digital signature is not signing a document and scanning it. Adala. Your Aadhaar based signature is a digital signature. In fact, that's called as an electronic signature. Digital signature, it requires a public key encryption. Okay, so in some of you are going to office, you insert one pen drive sort of thing, that is a digital signature. Right? Computer related offenses, again, these are some things which are just self-explanatory. You can probably go through it. I'm not spending too much time into that. Then there's an element of privacy. Very important. Of late, I've seen questions being asked, not just here, it in general. Privacy is nothing but using your personally identifiable information. What is a personally identifiable information? Your name, your phone number, your contact details, right? All of these are personally identified. If I know that number, I can know who you are. The moment I get to my phone number, I can start sending so many calls, messages, loan beka, idu beka, adu beka, ice cream beka, all of those stories, right? So I am trying to define data, computer systems, all of those in your law, and therefore that is given under the IT Act. So that is where they actually define it. An example of a privacy policy, you could expect, draft a privacy policy in examination as a practical question. You in 3 or 4 lines, you just try to remember that. Then comes this important thing called as sensitive personal data, SPDA. Those information which are sensitive in nature, password, healthcare, right? So all of those information would be called as sensitive personal data. A simple example of a sensitive personal data is health records, right? So imagine a person had some sort of an issue, right? Can you keep on saying, hey, you're there, there? It doesn't make sense, right? You have to safeguard it. Or imagine the moment you tested something for accidentally, let's say on a jovial note, somebody tested for COVID positive. Immediately you get 100 calls. Sir, we have free hospital. We have in-house checkup. We have free medicine. You get irritated, right? You're already mentally, morally down, right? Because you're unwell or whatever it is, right? So this is basically what they're saying, sensitive personal data. This is basically under section 43A of the Information Technology Act. You need to protect it, right? And this is applies to all companies, entities, organizations. And here the word body corporate is very, very broad. Body corporate can mean even you and I as individual in our business capacity if we are collecting any data. What are the sensitive data? Passwords, financial, psychological, mental health, physical, sexual orientation, medical history, biometric, all of those things are simple examples. Then comes consent. Whenever you are taking this confidential information, there is a mandatory requirement for you to take a consent. That means only with your permission I'm able to do it. Simple example, when you download the app, you put one tick mark, they consent, right? The moment you have given that information, right? So quickly summary about this chapter. We spoke of first concept of BP and objects, then ERM. Then we focused on risk and controls. We looked into diagrammatic representation of business process like flowchart. Then we looked into few processes. I told you, procure to pay, order to cash. Then we also looked into regulatory compliance. Quickly, if you have any questions, you can ask me. Otherwise, I'll jump into the next chapter. The next chapter we are quickly going to go is something called as a core banking system. It's a sort of a specialized software. The reason why this is specifically covered is because of its importance. Tomorrow, when you become chartered accountant, one of the areas which you always audit is a core banking system. What is a core banking? It is nothing but IT-enabled system which is helping you to do anywhere, anytime banking. Right? Today, if you are able to click of a button, transfer, send money, receive money, and if you think India is way ahead of the world in terms of digital payment, it's only because of this core banking system 10-15 years back with our, I cannot use the word forefathers, it does not make sense. It could probably be 2 or 3 generations back when they thought of this concept, they actually brought it. And today we have taken it to a way greater height, right? So very quick, so very rapidly, all this information takes place. So if you look into any bank, right? Bank has got typical services like this. In a gist, I will give it to you. Deposit acceptance. What are the types of deposits? Savings bank, current account, or your FD, etc. Then granting advances. Advances is nothing but issuing loans, right? Advances is what the bank calls it. In our parlance, we call it as a loan, right? Then you have remittances, transfers, collection. On your behalf, they are collecting, and clearing, check clearing. I also have special types called letter of credit. Here, letter of credit, simple example, import-export transaction, where I am buying some products from Mr. Chungwa. I am buying Chinese gobi manchuri patre, right, from Mr. Chungwa for starting gobi manchuri shop. But he cannot trust that fellow, or he also does not want to trust me. So both the sides, there's a problem. So what I will tell my bank, I'll tell my bank uncle, ishtoli duddu ನೀವು ಇಟ್ಕೊಳ್ಳಿ. The moment I get the goods, I will give you one green signal, or I'll ring the bell. You go ahead and transfer them, right? The same way, there the Chungwa will tell, hey bank, the moment these goods are delivered, please come and give me the money, right? They will go and tell something like that. So the moment I get an acknowledgement that goods have been received, he can go ahead and encash it. That's a simple arrangement of a letter of credit. That means it's a guarantee that you can go and encash it. So the difference between like letter of credit and letter of guarantee, both of them work on a similar basis. Letter of credit operate on a trade. Letter of guarantee will operate on anything. It could be even for a personal loan or any of those things. Then you have credit card, debit cards, which we all of us have understood. Other banking, back office, front office, retail, HNI banking, etc. Loans, life insurance claims, and rating. So that's the sum. And this is the most important area where they normally test you. It's easiest debit and credit. I'll just spend a minute on that particular slide. Give me a minute. Remittances, I think we spoke. Actions, we spoke. Clearing, we spoke. Right? MICR code. Then ECS debit and credit. Very important examination question. People tend to get confused over here. It is always from the view of the bulk player. It's always from the view of the bulk player. Who is the bulk player? If the bulk player's account is credited, right? Whose account is ultimately get credited, all the monies are coming to one fellow's account. That fellow we call it as ECS credit. When will one fellow's account get credited? That means all of them are paying to the same guy. Example, water bill. Example, Bescom. All the bills are paid to whom? Electricity board. So that fellow's account is getting credited. That is called ECS credit. If one fellow's account is debited, all other fellows' account is credited, then we call it as ECS debit. Always read from the language of that one debit or one credit. Don't bother about multiple. What is the source? Right? So in case of ECS debit, classical example is interest and debentures. Right? That is a popularly asked examination question. LC credit card, I think we spoke of all of these things. We are reasonably aware of that. I'm just trying to go into certain important things. Overview of core banking solution. A core banking is nothing but a common IT backbone supported by technology, which has high standards of business functionality, and very important, it has high levels of service availability. Means what? Normally this should never go down. Continuously work ಆಗ್ತಾನೆ ಇರಬೇಕು, right? Because if it goes down, you can imagine what is the complication. Now this banking has got two servers or access levels, right? These are all a few simple examples, and these are the modules. You have a central server, you have a back office, ATM switch, mobile banking, and a lot of interplay. The central server is basically which acts like a interplay between all the front-end applications and the back-end applications. What is back-end? Those which are used for processing. You and I cannot normally see it. Front-end, you and I can see it as customers. If you're auditor, you will focus on this one. Other part of story. Right? As a general customer, whatever you see is only the front end. This. Now comes the interesting thing. What are the core functions of a core banking software, right? What are the typical things? These are all simple examples. Whatever you're noticing over here. RTGS, NEFT, real-time transfers, all of those are features. And any features which you come across of a bank, you can mention. Now in CBS, there are two things. One is a information flow. The flow of information is very important. At the same time, it should be customer centric. Why customer centric? Customer should not feel very, very pained or uncomfortable doing this, right? So that is the most important thing. This is called as an architecture, right? Now where you have multiple channels. What is a channel? How do you obtain the banking service? You can obtain the banking through mobile phone, through UPI, through phone banking, telebanking. The list is endless, right? And you can reach through multiple methods. There are multiple data sets. Typically, if I have to expand it, this could also be another variant of this. Now here you have multiple types of servers. Examination asks question. Application server is also called as a core banking server. The core logic is written over here. Simple example, can I give money if that fellow's balance is 500, he is asking for 5,000. Can I give or not? That is defined over here. You can give it only if it's an overdraft account or a cash credit account, subject to a limit there also. So that logic, where it is written there, it is written in the application server. Are you clear with this? Next is a database server. That is where your data is stored. Please understand, you keep this as your gallery app. This is your WhatsApp app. From WhatsApp only, you have to open the gallery, let us say, example. Right? So understand the relationship. Next, ATM, I think it's a very simple thing where you have an ATM channel server. Based upon the banking and based upon the positive balance, the money gets transferred. Then you have IBCS, Internet Banking Channel Server. This is basically which has all the username and password. The moment username password are validated, it will give access to the Internet Banking Application Server. This is where the logic will be written. For example, for NEFT, maximum online banking 50 lakh rupees, 20 lakh rupees. If you want to do more than that, you have to come to the bank and do. That is basically channelized over here. Right? Web server, this is basically all of them and the branches, if they have to access, they use a web server. Proxy server is a dummy server, so that in the external world you are hidden, so that any person who actually sees this does not know you are a bank. The moment they get to know the bank, they can actually come and attack you. Right? Antivirus software, which I think most of us know. Right? And this is how the technological architecture is. You have client channel servers, application servers, features. Then you have the functional architecture, where a wealth of things you have. right? Consumer bank, corporate banking. Then you also have various other general information. On top, you have the CRM, etc. One other question is internet banking process. I don't think I need to spend too much time here because all of us have an internet banking account. We know how this entire thing works. E-commerce, whatever is there, don't touch it here because it will get covered in the next chapter. Easy way. How does a CBS work? Starting from planning, approval, selection, deciding which software to use, approval stage, selection, which software I have to finally go for, right? Planning, approval, and selection. Then architecture, test it, and implementation. Architecture is designing how you want the house. For example, think of you want to go to a new house, right? For various reasons. You will think that where do I have the house? I have to go to apartment or standalone house, right? So many questions you need to do. Whether you have the funds available, right? Then you will select various models. Once it is over, then you will check the architecture, interior, external design. You will test it. And rather than testing, here you'll go see what is the various models, model house, etc. Then you will construct it. Then periodical maintenance, support, updation. New section added. Of course, in each case that various risks associated with core banking software. First is operational risk. This is basically anything which could result in a risk from or a loss to a bank due to failure of internal controls, process, people, systems. Example, if backup is not taken, you have to pay the penalty. Employee does some cheating. Cashier takes the money away. All of those things are operational risk. In a bank, operational risk is very, very high, right? And operational risk excludes strategy and business risk, right? And normal components is legal risk, compliance risk, people risk, etc. You have what is called credit risk, the risk that you have given money, but the fellow will not pay you back. Basically he borrowed the loan, right? And you left him alone. He borrowed a loan and you left him alone, basically, right? You can't do much out of it. Then is market risk. Typically what you're seeing today, right? US dollar price is $80, right? What was the price? I think 6 months back, 72. 8 rupees has increased for every $1, right? Your petrol price is still not increased beyond what is that 100 range, right? This is what is economics. Because normally ever dollar increases, petrol price and inflation will shoot up. This is what India has done very, very strategically, that they're buying oil from a fixed price from Russia. And they've told we'll pay you only in rupees, right? So this is where India is becoming more and more powerful. In GCC countries, the moment you go to airport, they are now saying we accept Indian rupees. Earlier, they used to say we accept US dollars. Now they're saying Indian rupees we accept. So we are becoming more and more powerful. Wait for another 5 to 10 years. We will be among the top 5. Another 10 to 20 years, we'll either be 1 or 2. Right? It's definitely going to happen in our lifetime. Even that time, I'm not sure whether social studies book will say India is a developing economy. Adu gottilla. But anyways, let's ignore that. Anyways, market risk, all of us are clear. Strategic risk. My strategy itself goes wrong. Simple example, I started one blockchain business or I started one cryptocurrency business. Tomorrow government says, boss, nothing doing, shut the shop. So my entire strategy goes down. Compliance risk of not filing the taxes, penalties, not comparing, adhering with the law. Now, you obviously have IT risk associated with core banking software. A few examples is given: ownership, authorization, incident, access control, right? What if somebody gets access to my bank account, right? Can they go do mischief? All those stories come. Then banks are suggested to have information security policy in line with ISO 27001. It covers about security policy, user security admin, right? Database security. How can I protect the database, right? Application security, OS security, network security, physical security. So these are all the various securities which we have to look into. This is nothing but your chapter number 3. Risk of operating system, risk of network, risk of physical and environment. Entire thing is covered. And these are few sample examples of whatever can go wrong. Which is the key IT controls, right? Lack of management direction, potential loss of confidentiality, user accountability not established, etc., etc. One of the examination question, what are the critical internal controls in case of a bank? The slide is very important. Internal controls in banks, supervision, job rotation, maker checker, segregation of duties, all of those are internal controls. IT controls in banks, record of entry, exit, checking the rules, it automatically messages in case of exceptions, right? If some account is debited or credited in your account, don't you get a message immediately, right? Sometimes even for 1 rupee you get a message, right? Adukoskara or 20 rupees to one account in that, but you will still get a message. Bank charges SMS sends. Now this entire thing can again be bifurcated into configuration, master, and transaction. At a configuration, what is the risk? If you have created an incorrect username, incorrect customer type, right? Incorrect access privileges, all of those comes under configuration. Then you have masters. What is masters? Master is nothing but the data which is created once, reasonably permanent. A simple example, if I make a person a senior citizen, he will automatically get entitled for higher rate of interest. For all you know, that fellow is 18. I have entered as 81. Right? These are all simple examples of masters in the case of bank. Customer master, deposit master, employee master, right? All of those. We have transactions. Transactions are nothing but deposit, advances, ECS, GL, all of these things are examples. And then you have application software. This is basically where the core logic is written. Normally, what is the risk here? Interest is not correctly calculated, rates are not taken accurately, absence of appropriate system violation, etc. What is the controls? Controls are there is a predefined logic and people audit it. Interest rate is default coded. You cannot go and modify. System validations are implemented so that there's no duplicate accounts, right? A simple examples like this. Then you have core business process flow. Again, one of the areas where they test you normally, right? In this, there are basically 5 or 6 processes: CASA, credit card, mortgage, etc. If you remember, the first is a CASA process. CASA and credit card process is same. There's a small concept of what is called as accepting the credit risk. Normally in CASA, we don't have a concept of credit risk because any person can open a bank account, right? But earlier, what used to happen, if you have to open a bank account, only by referral you can open a bank account. Somebody has to introduce you to them, right? That was the system. But today, now, after this Jan Dhan and all these systems came, almost everybody in India has a bank, right? Some of them have disclosed balance, some of them have undisclosed balance, but right? So customer opens an application, what is called as CASA. CASA refers to accounts and savings account, right? Don't write what is CASA, KASA or whatever, right? Go to a branch, KYC documents, the risk team gives a clearance, and then they open the account. The same process works reasonably even in a credit card. What are the risks? Risk is your credit line is incorrectly set up. That means you are permitted to withdraw only 1 lakh rupees. I have set it as 2 lakh rupees or 2,50,000. So 1,50,000 maja marta. Credit line setup is not on the list. Customer master is not in accordance with disbursement criteria. Accurate charges, all of those are few risks. Then you have credit card facility. Same thing from a bank perspective. Settlement is a little different. On top, what you see is a sale authorization process. So first you go to the exchange shop, you go and wujify the credit card. The moment your wujification is completed, right, the information goes from merchant, from that fellow's shop to the merchant bank. In turn goes to the credit card network, which is Visa, Maestro, whatever. From there, it goes to the issuing bank. Authentication happens, then comes back and gives a clearance. This happens in a span of less than probably a minute or two. So this entire thing today in UPI is reduced even more further. And this fellow credit card network is completely losing money in India with UPI coming in, right? And most of the fellows are using UPI literally for free, Google Pay and all these fellows. I don't know what money they will make, but at the end of the day, they're giving you that facility. Now look into clearing and settlement process. The clearing and settlement process is a little different. The moment you have swiped, right, the amount will not come to you. Now you need not immediately. The credit card network will pay to the bank immediately. After 3 days to 10 days, 15 days, whatever your billing cycle, the bill will be set. Right? Then you have what is called as mortgage. What is the meaning of mortgage? Loan against immovable property. What is it called? Loan against immovable property. Basically land and building, right? So that we call it as a mortgage. Now here again, the customer approaches the bank. You go and produce the documents, get a clearance. Once all these things is over, it is not sufficient that if you have clearance of, you should be, there are 2 clearances when it comes to mortgage. The first clearance is you should be the rightful owner of the building. The second clearances, you should be the rightful owner of the building. Second clearances, you should have the income to pay back that loan. You are going near general post office, alle left tagondbiಟ್ಟು ಇಲ್ಲೊಂದು ದೊಡ್ಡ ಬಿಲ್ಡಿಂಗ್ ಇದೆ ಸರ್, ಇದು ಅಗೇನ್ಸ್ಟ್ ಲೋನ್ ಕೊಟ್ಬಿಡಿ ಅಂತ ಬ್ಯಾಂಕ್ ಹೋಗಿ ಕೇಳ್ತಾರೆ. ಬ್ಯಾಂಕ್ ದೇ ವಿಲ್ ನಾಟ್ ಗಿವ್. ಯಾವ್ದು ದೊಡ್ಡ ಬಿಲ್ಡಿಂಗ್? ವಿಧಾನಸೌಧ. Sir, ವಿಧಾನಸೌಧ ಇಲ್ಲ ಚೆನ್ನಾಗಿದೆ, give me some loan based on that. Means not possible, right? But you should be owner of the land. Don't say, sir, I am the taxpayer, my money only is paid there. All that story movie ಅಲ್ಲಿ ಚೆನ್ನಾಗಿರುತ್ತೆ, but not practical, right? So you need to demonstrate that you are the owner. Or if you are buying a house, right, from whom you are buying, you have to demonstrate that guy is the. Then bank will decide to do all of this, right? Then they will credit risk, underwriting, verify the documents, all of those. If it is over, then they give a clearance, and that's typically how it happens, right? What is the risk? Incorrect customer loan details are entered, incorrect loan amount, right? Interest amount is not just correctly, unauthorized changes. All these are a few examples. You have treasury process. What is treasury process? Dealing with foreign currency, dealing with government securities, dealing with forward contract, future contract. Forward contract, future contract, I told you in one simple line. Agreement entered today, price fixed today, execution tomorrow. Say you are in agricultural industry, Lace chips company comes to your land and says, boss, your field, whatever potatoes is that, I will buy, every ton at X rupees. I will decide the price to X. Or every 1 kg, I'll buy it at 8 rupees. I'll fix the price. Tomorrow, even if it is 80 rupees, you have to sell it at 80 rupees. Tomorrow, even if it is 1 rupee, I will sell it at 8 rupees. Now here in that treasury, you have 3 rooms: front office, middle office, back office, or a 3-room operations or 3-level of operations. Front office will decide where invest when first. It is more like your mother's hand, which knows how much is the masala and how much is the items you have to put. Middle office only supplier, togo, wapas idodo, correct? So that's the middle office, accounting, transaction, all of those basic stuff. The back office is cleaning up, ensuring everything is in place, right? Doing BRS, reconciliations, all of those are back office. There's loan and trade finance process. Here again, you have fund-based or non-fund-based. Fund-based means which you already spoke of, any other loan facility. Non-fund-based means you are issuing a letter of credit or letter of guarantee. Process flow is more or less the same in both the cases. I'm not spending too much time. What is the risk here? Again, credit line not set up, credit line not authorized, masters defined incorrect. So you'll find all these common points across all the products. Last section comes, what are the regulatory framework? The first is impact of technology in the banking. Today, unfortunately or fortunately, bank runs only with technology. You minus technology, bank will not work, right? Nobody knows what to do. Also, nobody knows how much is the account balance. Forget that. Do you know what is your account balance today? You will know provided you got one message or you remember reading it, right? After 5 minutes or after 5 hours or after 5 days, I ask you, you'll just say, because everybody are dependent on technology, right? So this technology in a banking defines a process. It ensures policies are in place, ensures organization structure there. It also meets your regulatory requirements. There's a huge requirement of what is called as AML, anti-money laundering. Basically taking the proceeds of crime and showing as though it is a clean money. That is what is called anti-money laundering, right? Or rather, it's called as money laundering. Trying to avoid that is called anti-money laundering. Penalty up to 10 lakh rupees. Sorry, wherever there's a transaction in cash or transactions have been performed so very integrated that the value is exceeding 10 lakh rupees. In all those cases, you need to report to the nearest, or not the nearest police station, but rather the nearest finance intelligence unit. We call it as FIU, Finance Intelligence Unit. One of the most popular examination question, 3 stages in money laundering. First is placement. This is where you earned illegal money, you move it away from the scene of the crime, bring into a less suspicious place. Layering is basically bring that into multiple layers, bring it into corporations, shell companies, offshore companies, etc. Then you integrate. Integrated is basically conversion of illegal proceeds into legitimate or basically business. This is what we spoke of. Then we also have negotiable instrument. This is the act which defines what is an electronic check, what is a truncated image, right? All of those things are defined out here. RBI Act again is the RBI is the monetary authority. Again, these are general GAN which is they've given there. We'll go into very specific things if there is something. Otherwise, we can just wrap it up. Yeah. Again, there's a RIP of sensitive personal data. Over here, which I think we should have that. And every bank should have a privacy policy. The summary is this chapter covers core banking, introduction, concepts, all of those. And then it moves into architecture and components, most important area. And then we look into risk and controls, credit cards, whatever we speak. And then we had regulatory compliance, RBI, banking regulation, negotiable instrument, information technology, etc. Are we clear? Yeah. Any question? Quickly glance through it. Just give you a quick 1 minute break just for stretching and coming back. At least I will require to stretch and come back. But yeah. Welcome back, folks. Last chapter which we are going to head into E-Comm, M-Comm, and emerging technology. In terms of E-Comm, M-Comm, I think there's nothing that we do not know in today's world, because we have been buying and shopping literally, and thanks to COVID, it has just accelerated it. But obviously focus on the risk and controls over here. What is an e-commerce typically? Is nothing but driving things through a digital, right? Commerce is electronically, M-commerce is through mobile phone. There's a typical commerce setup. If you're working from home and if you're shopping from home, that's called as e-commerce. Working from home, shopping from home, whatever you call it, that's typically e-commerce, right? And the other day I was asking one person, say, boss, what are you doing since last half a day? What all the work did you do? This was at a client place. Then I was working very, very hard. And I was shopping very, very hard. I said, boss, shopping. I said, no, I'm working from home or shopping from home. The last 3-4 hours, I was doing only shopping. Yeno shop madidane, one pencil, one pen, right? So for that many number of hours, literally, you can read reviews. I don't know, all possible things is there, right? I was trying to buy one very small one selfie stand. Just one very selfie stand. I landed up spending half an hour for looking into the selfie stand reviews. I could have just walked into a store and picked it up and come, right? But anyways, that's just the fun side of it. Difference between traditional e-com, I think you're all aware. I'm not touching that. I'll focus on where there is a area of examination question. The various types of e-com models. E-shop, right? Exclusively for one fellow. W for women is a classical example, or sonicnet.com. Any of those are exclusively for one fellow. Right? E-mall, it's a conglomeration of various different types. Paytm Mall could be one example. Then you have what is called as e-auction, auction sites, ebay.com. Portals is basically where they offer content, some information, etc., on a subscription basis. Then buyer aggregators, classical example, Zomato. Multiple aggregators are listed. Virtual community, it's just community of people, they interact, share, right? They can also give you some information. Like for example, Amazon has its own community of people. E-marketing, basically trying to do only completely digital marketing. E-procurement is more on the B2B side. What is B2B? To procure products from a business side. The government of Karnataka, government of India, all these fellows have their own e-procurement websites, right? E-distribution, exclusive distribution chain. For example, Wipro has set up exclusive distribution chain for specializing in e-commerce, etc. Right? Now you also have different types of models. You have what is called as B2C, business to consumers, right? You have B2B, basically business to business. Your Ola, Uber is a B2C, right? Flipkart is also B2C. B2B is M Supply or any of these players. Consumer to consumer is your OLX, selling reused cars and other things, right? Today there are much more models, but let's restrict it to this. The components of e-commerce, this is one sort of funny robot image, but this is an important examination question. Why they can pick and choose any of these small topic to ask as a MCQ question or a short note question. So what are the things that you have? Obviously, user, you and I, electronic e-commerce vendors, the guy who's supplying the product. Then you also have warehouse operation, the place where it is temporarily stored. Right? Ship and returns. Ship and returns is all about, you ship it, how do I get back the returns? That entire shipping partners. E-commerce catalog, displaying all those things, fancy websites. It should be catchy. It should be attractive to you. So literally, they do a photo shoot for products. They do a photo shoot, just like how this, bridegroom today, all of them go through a photo shoot, right? Or this new baby born that goes through a photo shoot, etc. The same way, e-commerce product goes through a photo shoot. Even on bottle irbodu, they put it typically in a Photoshop environment and they do all of those things, right? Showroom, offline purchase, different ordering methods, guarantees, all those things are required. Then you also have technology infrastructure, computer, server, database, right? Mobile apps, what you're enabling us to do, right? Front end, back end, all of those things. Then you have the digital libraries where all the records of the particular product or item is available. And then you have data interchange, moving of data. And there's also public called as EDI, electronic data interchange. I have one format, you have one format, bank has one format, bridging all of them together. And internet, obviously, necessarily portal or mobile apps. Payment gateway is the mechanism through which you make the payments. Right? Architecture of this is basically 2-tier or a 3-tier. 2-tier has presentation and database only, whereas a 3-tier has presentation, application, and database. So presentation, one could imagine that how it appears on your phone, how it appears on a laptop, how it appears on a mobile phone or an iPad, right? Server is also called as application layer where the logic is written. Database is where the data resides. So both of them have its own advantage, disadvantage, right? 2-tier and 3-tier. 2-tier is very simple, but as you scale up, you have to invariably go for 3-tier. That is the summary, right? E-commerce, I think we already spoke of this. I'm not going to spend too much time there. You have a client user interface who logs in through an app, etc. You have an application layer, which is an app where you actually make the purchase. You have a database layer where it pulls the information. For example, you may have some points, you may have some cashback points. All of those comes from a database. Then you have m-commerce. M-commerce is basically the same thing driven through a mobile app. how does the entire workflow happen? Right, a customer either over call or through mobile phone, right? He places an order, and then the order goes to warehouse shipment, and ultimately it reaches you. This entire e-commerce workflow is a little different. Now, how does that entire thing work? You have a customer who has to log in. Why is login mandatory? That is the only way you can avoid fake customers. Otherwise, if you don't enable login, you can have any number of fellows who will just log in. He will just click on the product and send the goods. When you come over there, he will say, no, you bartira illa anta kelak na phone madade. Right? It's no use. Customer places the order, make a payment, dispatch. Now, what are the risks? What are the risks and controls in the center setup, right? Privacy and security, quality issues, delays, right? Need to have internet access, right? Security issues, infrastructure, credit card issues, problem of anonymity. I do not know who's buying or selling. The physical, I know person is coming and buying, right? In a digital, I do not know how it works. Reputation, what if he cancels the contract? Authenticity of the transaction. So there are multiple sets of risks. Yeah, I think we already looked into the videos and other things. I don't want to spend too much time there. So what are the controls which is possible? User has to be a genuine user. That is why we always ask the user to log in. The buyer seller has to be a registered fellow. That's why we ask him to show his GST record, show his transaction, etc. The government also wants to tax them, so therefore they enable, GST, TDS, etc. Then you have technology service provider who provides all these apps. Logistic provider is basically the shipment. Then payment gateway helps you to make the payments. Next is what are the guidelines covering e-commerce? Obviously, you have the GST regulations, income tax regulations, right? Income tax, GST, Companies Act, Foreign Trade Policy, Factories Act, right? What is permitted, what is not permitted, Customs Act, GST Act, right? Indian Contract Act. So all of those things are high-level laws which are applicable for a e-commerce sort of a setup. Competition Act, very important, because the price sometimes they sell it so low, it is lower than the cost itself, right? So that is where it is. Then comes an element of digital payment. You have modern methods of payment today, my dear friends. Thanks to this COVID, this only increased, right? You have banks, USSD, other enabled UPI payment system. So a few things we are going to discuss. UPI is the most modern, and let me tell you, it has significantly increased. Literally 3 to 4 billion transaction rupees happen in UPI. 3 to 4 billion, right? I don't think I'm talking value. I'm talking about the quantum, right? If you just go search online, it will give you a nice image of how the digital payment has changed. It started with very, very small information and to UPI significantly changed. The next highest is IMPs, immediate money payment system, where if I just have a phone or a ATM card also, I can go and do an instant transfer. Then there's mobile apps like Beam, right? Then the mobile wallets, Paytm wallet, Aadhaar to other enabled payment system, USSD, *123#, making payments through that. Next is e-wallet. These are referred to as traditional methods, but it's not so very old. Your digital cards, credit cards, debit cards, etc. Net banking. Then we move on to a very, very important concept called computing technologies. In computing technologies, we broadly cover three broad things. The first one is called as virtualization. Physically one, virtually many, or virtually one, physically many. Physically one, virtually many. That means take one large computer, divide it into 5 computers. Physically, it will still be one, but it will operate as though 5 people can log in and work at the same time. Reverse. Physically, there'll be many, but all of them put together is just one. This is like that movie in that Rajnikant. You see small Rajnikants together put and become a bigger Rajnikant. And all those funny things which you see, right? So virtualization. So this is what I told you. You have a small layer over here, which is the physical server. You have multiple virtual servers. And this is basically possible through a solution called as hypervisor, so that you are actually doing this. What is the advantage? You're consolidating a server, disaster recovery you're bringing in, testing, training, portable applications. So all these are advantages, right? Now this virtualization, if it's done slightly in a better context or a bigger context, we call it as a grid computing, right? And by the way, this is an example of a virtualization. This image, server, hypervisor, you have virtual machine 1 and 2. What is hypervisor? The software which splits it into 3 or 4. Then this virtualization can be storage virtualization, network virtualization. Then you have grid computing. I always give this example. Your unused data of your parents you are using, your unused call of yours, your parents are using, right? Unused resources are being shared. Likewise, my hard disk unused resource you use, your hard disk or RAM unused resource I use it. When I say I use it or uses, it's not that I'm transferring from you physically, but logically it is just adjusted. That's what is a grid computing. One of the popular questions in a case of a grid computing is what is the risks of grid computing, right? Of course, why do you use grid? Grid is for multiple purpose, utilize underutilized resources, balance, resource optimization. Now, if you see, I think from yesterday or today that Amazon Prime sale is started, right? Now, obviously, huge demand for Prime will be there. Everybody will log in. Immediately, Flipkart also will launch that. Snapdeal also will launch that. Okay, but don't you think huge demand will be there? Yes. So, will they buy new server for this? No. They will balance the resource, right? Parallel CPU, virtual resources, etc. What are the things which are shared? Computation. That means the processing power is shared, or the storage power is shared, or the communication power is shared. These are the type of resources which is shared. And sometimes software and licenses. Instead of me buying the license, what I will do is I'll just buy 3 or 4 licenses. I will install the virtualization layer. People can share that license, right? Computing security, very important. What are the issues? First, try to avoid have a single sign-on. That means once you sign on, once you sign in, you need not sign in every time you're entering into some other machine. Protection of your login credentials. I've entered username, password, but not in my system, in your system. So you will obviously say, sir, I will get access to it. So that's not possible. You have to protect it. Interoperability. My security systems may be different. Yours may be different. Mine is a Windows. Yours is a Mac. My requirements of backup antivirus is different from yours. So how do I do an interoperability? Then comes the concept of cloud. Cloud is somebody else's computer in a layman's language, which I'm accessing over the internet. Next version of grid, right? Next version of grid. Somebody else's computer accessed over the internet, and I'm paying money only for whatever I'm using, only for what I use. Basically, what a cloud computing is. So this is what is called as elasticity. What is elasticity? The more I want, the more I can use. The less I want, the less I can use. Per use. Only if required, you use it. On demand. Whenever you want, you just use it. Resiliency. Highest amount of resiliency. Why? Because the cloud service provider ensures that he will have at least duplicate servers or triplicate servers. So if one goes down, there is something else which will take care, right? You have multi-tenancy. What is multi-tenancy? Just like I told you, in one building, you can have multiple tenants. The same way here in one building capacity, you can have multiple things. Then you have workload movement. Workload movement is how the work is being moved between multiple stages. Then various advantages. I'm not going to spend time into this. Now your cloud is basically consists of 4 types called as deployment models: public, private, hybrid, and then you have community. Public, anybody can use. Private, only for your organization. In that private also you can have on-premise or third-party managed. Those are just 2 variants. Hybrid is combo. I am using my private cloud. Suddenly data is insufficient. I use a public. Reverse. I always use a private cloud. Some extra space is available. I rent it out to somebody else. So my private cloud acts as a public cloud for somebody else. Community cloud for a select set of people alone. Right. So those are the 4 models. I'm not going to spend too much time into that. But what I can do is, here you have that summary which I've created. Public cloud, private cloud, community, and right. Then you have also called as how is cloud served? How do I serve it? This is served through 3 models called as IaaS, PaaS, and SaaS. This is based on the NIST framework, National Institute of Standards and Technology. Now, what is the meaning of this in a layman's language? What is it that am I using? Am I using only the infrastructure? Am I using only the platform or only the software? Right? 3 different examples. I have a building. I give you the entire building and I say, boss, pillars, walls have constructed. You do what you want. First model, infrastructure as a service. I now design it for a CE office, but you have to do the interior design. That's a platform as a service. I now have decided for a specific work from home or a virtual office where anybody can come, bring their laptop only for one desk or one laptop. They have to pay the rent and they will disappear. That's called SaaS, software as a service. Infrastructure, hardware level service agreement. IT architects need not maintain physical servers. Okay. Web resources, centralized management, all of those are based on browser. They actually give it that to you. Then you have what is called variants of infrastructure service. Network as a service, giving the network on demand. Say, for example, for some days, some period, you want higher network bandwidth, etc. You can use that. Storage, database, etc. is possible. Backend, desktop. So these are 5 variants. Then you have platform as a service, basically giving some platform, including some software solutions, softwares for you to design softwares for. All of those comes under SaaS. Last is a concept called SaaS. Example, Zoom, right? Where I'm paying money for a prescribed fee and I'm able to use that, right? The more users I want, the more money I pay, I get it. For example, we have chosen, let us say, 50-member plan, 100-member plan, we are able to use that. Software as a service. So this is the difference, who owns up what service. So different types of SaaS is also there. Hosting as a service, API as a service, email as a service, Gmail, Outlook, all these are email as a service, right? Your communication as a service, your chat platforms, data service, just giving the data as such, security as a service, authentication softwares, identity of the service, you're using your username, password creations, etc. All of those things become service. Then you have what is called mobile computing. I think that is something very self-explanatory. Basically using laptop or portable handheld devices. That is what is mobile computing. It involves 4 things: communication, hardware, software, and business application. Your app should be compatible with a mobile phone. You should be able to communicate. Hardware and software should be there. How this entire thing works: I and you are sending some information. It will use radio frequency and reach the other person. In turn, the reverse logic happens. Sorry. Then is green computing. Green computing is always using eco-friendly measures. Eco-friendly measures. Why eco-friendly? Because today we are all seeing how much of the electronic waste is getting generated. Trying to use a eco-friendly manner and reduce, reuse, recycle, using power-saving initiatives, etc. All of those things are green computing. Then you have a concept of BYOD, bring your own device. Nothing but smartphones, laptops of your own. You are bringing it so that you can use that in the organization, giving you what is called as flexibility. Right? Employees are happy, budget is reduced, all of those. But disadvantages, network risk. What is a network risk? Lack of visibility. You don't have visibility. Who, what, when, why, no visibility. Device threat. What happens if the device is stolen? Which device is getting into my network? I have no. Application risk. My data is in your system. Implementation. So these are called as BYOD risk. Then you have what is called Web 3.0. Web 3.0 is a concept called semantic web, right? Semantic web is basically computers are today used only for generation of data and automatically getting collected. So it has 2 components. It's basically called semantic web and web services. Semantic web is where machines are speaking with each other and taking decisions, right? And for doing this, you require a common framework for you to share the data. That's basically the semantic web. And then you have what is called IoT, Internet of Things. Nothing but non-living things speaking with each other. Your refrigerator speaking with your, or your mobile phone speaking with the air conditioner. Alexa speaking with your refrigerator or oven. All of those things are examples of IoT. Right? Home appliances, smart appliances. One very interesting use case of IoT, which is a big thing, but unfortunately it's still not fully implemented. Ambulance and traffic signals. The moment you know that there's an ambulance coming near a traffic signal, the traffic signal turns green, so that it is allowing the people to flow. So things like that. Right? We also looked into what is the risk to product manufacturer. If the product manufacturer is not able to bring IoT devices, he may run out of business. Risk to the user product, privacy, autonomy, technology, risk, all of those. Then you have AI, ability of a machine to think and interpret decisions on its own. Quite similar to a human being, it will take decisions. Autonomous vehicle, medical diagnosis, etc. The variant of AI is what is called machine learning. Basically, program where computer programs are exposing to new data and raw data. They are learning and they start doing things on their own. A simple example is when your when your Siri or Alexa understands Amma is equal to mom, appa is equal to dad. You would have saved some number as appa, dad, whatever is there, and it is able to correlate it. That's an example of machine learning. Right? And then here you have multiple types: supervised learning, unsupervised learning, etc. Not there in your syllabus. This is where largely the future world is actually heading into. It's called machine learning. So that brings us to the end of this, and a quick summary of it. It basically covers on what is called as components of e-commerce, architecture of e-commerce. Then we have what is called risk and controls. Then you have emerging technologies, which is nothing but virtualization, grid and cloud. And then we are looking into what is called as mobile computing, green computing, AI, artificial intelligence, and machine learning. With that, it comes to the end of what I wanted to cover, and already the summary, tips and tricks I already covered in yesterday's session itself. Okay, so how you should look into, I'll probably take 2 more minutes if it is okay for all of you. Yeah, the way we will do it is very simple. Now that I've covered all the chapter in a gist, you roughly know what the entire content is. Now what you should do, first priority is pick up chapter number 3. Even if it takes 1 week or even if it takes 10 days, no problem. Daily 1 or 2 hours, you please study this. If you are able to spend more time, nothing like it, but at least if you feel too boring, too sleepy, at least 1 or 2 hours, right? Get first chapter very clear. Then you'll be very, very peaceful because the one major chunk you've finished. And chapter number 2, you will finish in no time. With that Josh only, you'll finish it off, right? And if you're done with that, that means you've covered 40% of your syllabus. Don't think, oh, I'll pass off the exam. No, 40% of your syllabus roughly. Then what you do, maybe a break or the continuity, slowly target, because you also are having revision, other subject revision classes also, right? And one of the biggest thing which people say is, sir, I will finish one subject, go into another subject. Never do that. Why? Because that one subject will never end, right? And normally we say first 10 days one subject. I mean, even if you do that way, there's nothing wrong in that approach, but have a cutoff. Even if you had thought that, you know, I will cover 80% in 10 days, even if you have covered 50% in 10 days also, stop it there. Jump into other things, because all subjects you have to give equal importance. 7 papers you got 60 on 60, 1 paper you got 39, you still have to write the exam on spot. I hope you're getting my concept, right? Sorry, I'm a little unwell, so that's why I'm trying my best to, you know, push it through. But yeah, so I hope you got the concept there, right? And be very, very calm and composed. It is definitely doable. It just takes a little extra effort, and IT is not a big rocket science. All of us are today using it. That wordings and terminology is what you have to use it. Are you clear with this? Yeah, so that is a core gist of what I wanted to cover, right? In which case I'm available over LinkedIn in case you have any questions to ask, or Facebook. We might mostly meet once more, you know, before the exam or whatever. I think sir might plan something else if something is there. Otherwise, I think it's a simple process. Keep progressively covering. Eventually, you will realize that one fine day you have done quite a bit. Are all of us clear? Yeah. Don't forget reading RTP, suggested answers, MCQ, very, very important. MCQ, very, very important. These 3 are critical. RTP, suggested answer, MCQ. And in parallel, I already told you the strategy and approach in yesterday's class. Right? All the very best. Do your exam fantastically well. And probably 6 months from now, I will wait for your pass out meet so that I can hear your success stories.
Thank you, sir.
Thank you.